No idea how to read a P&L? Today I'm going to break down the profit and loss statement so you can understand exactly how profitable your business is. If you haven't subscribed yet, hit the subscribe button and the notification bell to get notified every time I release a new video on business money. What I'm about to show you is the exact way I break down the P&L for my coaching clients, and I know it's going to help end your P&L paralysis. Let's jump in. All right, before we dive into the nitty-gritty on the profit and loss statement and what all the sections are, I want to point out two important things right off the bat. First of all, you may hear the P&L or the profit and loss statement referred to as the income statement. Those terms are completely interchangeable. Now, a lot of bougier companies and European companies will tend to call it the income statement, while a lot of smaller businesses like yours and mine tend to call it the P&L or the profit and loss statement. Just know that those terms are completely interchangeable. They mean the exact same thing. All right, the second thing that I want to make sure you're aware of is that every profit and loss statement covers a period of time or a date range. So the first thing that you want to look at anytime that you pull out a P&L or that you run a P&L is what date range am I looking at? That can be a complete game changer when you're looking at P&L. So really make sure that you're hyper aware of what date range the report is that you're looking at. All right, let's jump into some of the mechanics of a P&L. A P&L has three primary sections. So I'm going to go into each of those sections and I'm going to give you some examples and a little bit further detail on what they mean. The first section of the P&L, this is the one that we all tend to know as entrepreneurs. The first section is revenue, right? Revenue is just another term for sales. Revenue or sales, that's the money that comes into our business through providing the goods and the services that we offer. So if you are a coach, right, and somebody pays you for a coaching package, that's revenue, that's sales, right? We all know sales, we all know revenue, that's the easy one. The next section of the profit and loss statement is the cost of goods sold, or COGS, and cost of services. This is the one that, for me, it tripped me up until I really got into finance and accounting and got into graduate school and learned this. So don't feel bad if you get confused about cost of goods. It's actually not that complicated for coaching businesses, consulting businesses, or course creators. It's not that bad. All right, the kinds of expenses that go into cost of goods or cost of services are other coaches. So if you have a coaching program and you've got your friend Amanda helping you out, and she takes some of your clients and you take some of your clients, the money that you pay to Amanda would be considered a cost of services. Okay, so it's any money that you're paying to other coaches. Now, I know a lot of you also have some cool things like journals or maybe manifesting crystals. You tend to have some of those physical products that your audience just loves to get from you. The money that goes out of your business towards buying those journals, towards shipping those journals, towards packaging those journals, those are cost of goods, cost of services expenses. Okay, so again, cost of goods, cost of services is other coaches that you have that are providing coaching services for you. Now, keep in mind, I didn't say this is your EA or your OBM or your marketing manager or your ads manager, right? This is just services that you're providing directly to your clients, okay? Like other coaches. So cost of goods, other coaches, those kind of expenses in journals. Now, another thing that I want to point out, if you are an earlier stage business owner, if you are maybe a sole proprietor or the solopreneur, and you don't have an Amanda, you don't have someone else on your team offering coaching, you're not selling journals, right, or planners or those kinds of things to your audience, you're just providing the services yourself, you may not have any cost of goods. Your cost of goods or cost of services might be zero, and that's absolutely okay. Don't think that you've got to have an expense here, because you don't, and you probably won't until you start bringing on other coaches or start selling physical products. All right, so the first section was revenue. The second section was cost of goods sold. Now, when we subtract cost of goods sold from revenue, we are left with gross profit, okay? Gross profit, and all gross profit is the money that's left over after you pay for these things, the money that's left over for operations, right? It's that simple. Hey, before we continue, I have a question for you. What is the #1 business money topic or business money concept that just has your head spinning every time you think about it? Drop your answer in the comments section below, and I will do my best to create an explainer video just like this one to break it down for you. All right, let's continue on now. Once we subtract cost of goods from revenue, we know that we're left with gross profit. But if you've been in business more than about 2 hours, you probably know by now that there are other expenses in our business other than our cost of goods and cost of services, right? And we call those expenses overhead, right? Overhead. Those are all the other expenses that you might have to pay in your business. Fancy people will call those expenses SG&A. And by fancy people, I mean like accounting nerds. You might also hear them referred to as operating expenses, all right? And here's just a quick insider tip for you. SG&A stands for sales, general, and administrative expenses, okay? I like to call it overhead or operations expenses. It's just easier. So those expenses, those are the ones that we all know about. Those are covering things like our ads or our OBM or our ads manager, our Canva subscriptions, our cell phones, rent, payroll, all those things go into these overhead expenses, all right? So when we take revenue, we subtract out our cost of goods, we're left with gross profit. We subtract our overhead, boom, we're done. We're left with either a net profit or a net loss. And that's really it. That is the profit and loss statement in a nutshell. And as a coach or a course creator or a consultant, this is really all you need to know about the income statement or the profit and loss statement. Let your accountant, your bookkeeper, your CFO worry about the other complexities. This is really all you need to be focused on as the CEO. Did you find this video helpful? If so, please make sure to hit the subscribe button and the bell to get notified every time I release a new video on business money.